Hello, everybody participating in today's conference, and thank you all for joining us during the Lytham Partners Spring 2025 Investor Conference. My name is Roger Weiss, and I'm a Vice President here at Lytham Partners. With us today is Charlie Brady, VP of Investor Relations of BitFuFu, who will be taking us through their slide presentation. The company shares trade under the symbol FUFU on the NASDAQ exchange. With that being said, let's get started. Charlie, welcome. I turn the floor over to you for your presentation.
Well, thanks very much, and thanks for having us today, and good morning to everybody. Here's our title slide, obviously. I'll skip that. This is our disclaimer page. I'm not going to run through this, obviously, but the typical safe harbor disclaimers. So who we are, what is BitFuFu? We are a cloud mining and self-mining Bitcoin mining company. And one of the things that makes us unique is that cloud mining piece of our business. And so this just tells you why the founding, kind of why we were founded 4 years ago, really to make Bitcoin mining accessible to everybody. Obviously, Bitcoin mining can involve a lot of complexities, a lot of cost up front for someone who doesn't know the technology and isn't familiar with it. It can be a little bit daunting and very cumbersome. And so what we have is a cloud mining platform that allows essentially anybody to mine Bitcoin relatively easy, relatively quickly without the upfront costs. And I'll get into that more in just a few minutes. We are the #1 cloud mining service provider in the world. We have over 600,000 registered users on our cloud mining platform. And as of April 30th, which is our latest monthly statistics that we released, we currently have a 28.3 exahash of computing power, total capacity of that of 164 megawatts that we control and own, at 566 megawatts total globally for our power capacity. Our policy is to hold as much Bitcoin as possible. So as of end of April, we had 1,908 Bitcoin on the balance sheet. So this, again, as I talked about the two businesses here, self-mining and mining services. And I'll just talk about the self-mining piece first. And that's it's a typical mining business you'd find from most of the public miners out there. We have this hash rate, that 28.3 exahash, and we allocate some of that to mine Bitcoin for ourselves, and we allocate a portion of that to our cloud mining business. And what's unique about BitFuFu is that we have the ability, we have an internal proprietary IP technology that allows us to slide our hash rate between self-mining and cloud mining at almost in real-time basis, essentially. And so depending on what the market environment is doing, the demand for cloud mining, the price of Bitcoin, and a number of other factors, we will look at that exahash pool, and we'll say we're going to allocate this much to cloud, and we're going to allow this much into the self-mining business. It's generally the cloud mining business. If you look at 2023, the first 9 months of 2024, it was about 60% of our total revenues. We did have some mining rig sales in Q4, so that mix was a little bit different. It was still over 50%, however. And so, it's a meaningful part of our business. But what the cloud mining allows us to do is really manage the volatility that's inherent with Bitcoin and Bitcoin pricing. And so because what we are doing on the cloud mining side is we're taking this hash rate and we are effectively leasing it out to customers, both retail customers and institutional customers. And we sell this hash rate. The customer chooses how much they want to buy, a minimum in 1 terahash chunks, and they pay a cost per terahash per day, and there's a service fee per day on that as well. And we sell it in essentially chunks of 30, 60, 90, 180, 360 days. And so the customer goes on, does the KYC, know your customer background. Once they clear that, they then can go in and select how much Bitcoin they want to mine with, how much terahash, I should say, they want to mine with, and for what time period. And then they get a contract. And we get paid for that terahash cost up front. So we are effectively locking in that price at the time of the contract, and that doesn't change over the life of the contract. And so a good portion of our revenues really are locked in place and and are really not driven by the price of Bitcoin. Obviously, when those contracts expire and they get renewed or new customers come in, it gets repriced if necessary based on where Bitcoin price is and difficulty and some other factors. But a good portion of our revenues are generally locked up, and so we see that reduced volatility. And I'll get to this in a minute, but the company's been profitable every single year it's been in existence, which I think is unique for a lot of Bitcoin mining companies. One of the other services we've added recently is become a really full service Bitcoin mining service provider. And so, we've had hosting where we will host other people's, if you have a mining rig and you want to put it in one of our hosting facilities, we will do that for you and charge you a hosting fee. That's a relatively small piece of the business. It's been maybe 1 or 2% of the business. But what we recently added is our own mining pool. Right. And so when you're mining Bitcoin, mining it by yourself is your odds are much lower than if you're with a pool where you're pooling your resources and you're getting a percentage based on your contribution to that pool. It's a much higher success rate to get the Bitcoin reward. And so we've created our own pool with the lowest pool fees in the industry. And we also recently came out a few months ago with our own operating system for mining rigs, which allows the user to overclock and underclock their mining rigs and really optimize the performance of those mining rigs depending on electricity costs, which is obviously the biggest input to Bitcoin mining, time of day, other factors, and the type of rig they have. And we obviously deploy this on all of our rigs globally. And so it allows us to really optimize our fleet. And I think that's one thing that we do really, really well is fleet optimization. And that's key to managing that mining rigs and really being profitable. We don't just put the mining rig into a on a rack and just turn it on, right? We're flipping the switch. We're managing that in real time. We have the ability to monitor our entire fleet in real time, and so that's going to be key to us. And one thing on the cloud mining I should mention is that what makes it unique too is that the transparency of the cloud mining business, and so you can see what you're mining as a customer in real time. I mean, it is attached to a specific mining machine or machines, depending on how much terahash you're acquiring. And you can view that in real time, either on the app that we have or on the website. And so there is full transparency. You're seeing what you're mining, and we do guarantee a 95% uptime, which for the industry, that's a very, very high uptime. We actually run closer to 98%, but we guarantee 95%. And the reason we can do that is because our fleet, as you'll see in a slide here in a moment, we're on 5 continents, U.S. and a number of other countries, and we have this fleet that we can manage and allocate the hash rate. So even if we had an entire data center go down, we could slide hash rate from one area from self-mining side into the cloud side seamlessly. And so the customer would effectively never even know that happened. There wouldn't really be a blip in their production. And so that's why we can guarantee that high uptime for the customers. And so I think that when you're mining Bitcoin, one of the concerns is is how long am I going to be up and what's my cost going to be? Because obviously if the machine's down or it's down for maintenance, you're not mining Bitcoin. You're not making money, and your return on investment is obviously not going to be as great. So the fact that we have this ability to move our hash rate around at any given time dynamically in real time gives us that advantage to make sure the customer is mining Bitcoin essentially all the time, 24/7. This is just kind of a track record here of our growth, and you'll see the company was founded in late 2020. It's been profitable every single year, which I think is unique for some of the Bitcoin mining companies out there. We've grown revenues every single year. We've grown EBITDA every year. And you can see for the past 4 years, our revenue growth on a CAGR basis, compound annual growth basis, has grown 65% a year on average. And our EBITDA has grown 173% on average over that period, that CAGR. And on the right side of that chart, you see kind of a comparison of where we sit relative to some other mining companies that are out there, our peer group. And we are one of the largest Bitcoin miners out there. I I think a lot of people haven't heard the name BitFuFu. We came public a little over a year ago in March of 2024, so we haven't been out as a public company that long. And I like to joke and say we're probably the biggest Bitcoin miner you never heard of. But I think if you compare us to the peer groups that are out there that everyone's familiar with, we stack up pretty well. And again, certainly on the profitability standpoint, as you see from the lower right side of that graph, from a profitability standpoint, we're making money every single year in existence, which I think is unique as well for the miners. I talked about our fleet and our global data centers here. So we are a number of countries. You can see we're in the US. We have about 200 and over 200 megawatts, 230 megawatts in the United States. We are in South America, in Brazil and Paraguay. We're in Indonesia. We have a site in Finland. We are in Ethiopia, and we are in Oman as well. And so this again gives us the ability to manage the entire network and keep that uptime in real time. One of the things we've done more recently in the past 6-8 months or so is to acquire our own data centers. So the company was originally founded on an asset-light strategy, where all of this hashing hosting capacity here, this 566 gigawatts, was leased capacity. So we didn't own any of that. And in October of last year, we started to pivot to moving away from 100% pure asset-light strategy to acquiring data centers. And that's what we're continuing to do. So in October, we acquired an 80 megawatt facility in Ethiopia. It's a joint venture facility where we have the majority ownership there. Later in the year, we acquired 2 sites in the US on long-term leases with options to buy for 33 megawatts. And then a couple of months ago, we acquired a site in Oklahoma, 51 megawatt site there, a joint venture partnership where we have a majority ownership of that partnership. So we currently have, out of that 566 megawatts of global capacity, we control 164 megawatts directly. The rest of it is still leased capacity. And we've said we want to add an additional 1 gigawatt of capacity by the end of 2026. And more near term, we said by the end of 2025, we want that 566 megawatt number to be in the neighborhood of 650 to 800 megawatts, and our hash rate to move up to 33 exahash per second. And again, we're at 28.3% as of 28.3 exahash, I should say, as of end of April. So we're getting close to that goal, and our current pipeline is about 700-800 megawatts of capacity that we are evaluating and looking at in various stages of due diligence. Acquiring some of that is greenfield, where we would build our own site. A lot of it is brownfield, where we are going to acquire existing data centers out there. And so we've got the ability to do both. It really depends on the economics and how the ROI is going to work out on that. But we are actively doing that. And I think as we go through 2025 and into 2026, we fully expect to hit these goals and add at least that 1 gigawatt of capacity by the end of 2026. And obviously, with that, the exahash is going to continue to go up as well. We have been continuing to lower our cost. That was another reason for going into this pivot to own data centers. When we were leasing capacity, our all-in cost for that, because we're leasing it and we're paying hosting fees to the owner of those data centers, was somewhere in the neighborhood of 7 to 7.5 cents a kilowatt hour. And that included, the machine, obviously the machine hosting capacity, the profit for the operator, maintenance, D&A, all those. It was a fully loaded number. What we've done by owning some of our own sites and reallocating some of where these sites are, we've moved some out of the US into Ethiopia. We moved other sites around into low-cost areas. We've effectively brought that 7.5 cents down in a couple of different steps to closer to 7, slightly below 7, down to 6.5 cents a kilowatt hour, down just over to 6 cents a kilowatt hour. At the sites we own right now, we have very, very competitive electricity rates. So, for instance, that site in Ethiopia, that 80 megawatt site, our electricity cost there is 3.2 cents a kilowatt hour. That's all hydropower. In Oklahoma, our cost is 3 cents a kilowatt hour, and our cost to mine Bitcoin in Oklahoma, for instance, is $18,000 before D&A. So obviously with Bitcoin trading now over 100,000 and our cost to mine Bitcoin at that Oklahoma facility at 18,000, that's a pretty good return there. And the 33 megawatts that we have on long-term leases with option to buy in the U.S., that cost there is just over 4 cents a kilowatt hour. So very, very competitive rates. And I think as we go out and acquire more data centers in the U.S., you'll see us bring that all-in total rate down again over the next couple of years. And so as we do that, obviously our margins improve, and that's also helpful from a cash flow perspective as well. So we are, really turned into a really a one-stop mining service platform. Again, we started out just doing cloud mining. We had some miner sales and a little bit of hosting, but we've since expanded that out. And so we do some miner sales. In Q4, we had about $30 million of mining rig sales to customers. And I think you'll see us continue to do that through 2026. We'll have some additional mining sales to customers because the demand is there. And we really provide that as a service to our customers. We obviously have a very strong relationship with Bitmain, which is the largest manufacturer of ASIC mining rigs in the world. They are a strategic partner in the company, and we have as part of that agreement, we've got a 300 megawatt 10-year hosting agreement with them. So a lot of our hosting capacity is locked up for a long time at a very competitive rate. But we also, because of that relationship, have very good access to machines. And in fact, we did sign a 2-year framework agreement with them several months ago to acquire 80,000 ASIC mining rigs over a 2-year period at our option, at our timing when we want to do that. And that was on very favorable financing terms for us. And so what we're doing for customers, we have some customers that want to acquire rigs. Maybe they're cloud mining customers, maybe they're a hosting customer, but obviously they're not first to the line when the demand is picked up for mining rigs. And so we can help facilitate those sales to our customers. And obviously we're making a little bit of profit on that, but we're also securing that customer. And so it's really a full service customer service model for Bitcoin mining because, again, with the miner sales, we do lease miners to customers as well. And I mentioned that we have that mining pool now. We have our operating system. So it's really full circle, soup to nuts, one-stop shopping for whatever a customer wants to do from a Bitcoin mining perspective. And again, it's all transparent. It's in real time on the app or on the website. And this is monitored by a team of folks that are just looking at this and making sure we're optimizing the entire fleet. So I think that makes us unique in the space. And just on our cloud mining users, I mentioned earlier, we had over 600,000. It's actually over 612,000 users as of end of April. But you can see the growth that we've seen in these registered users of the cloud mining services. If you look at Q4 of 2023, we had a little over 300,000 registered users. You go to the it says Q1 2025, but that's really April, as of April actually, so it's a little more current. 612,000 is where we're at now. So we've seen tremendous growth in that registered users base. And I should add that we've done all of this growth without really penetrating the U.S. market. So we currently don't sell the cloud mining service into the U.S. market. There's been some regulatory hurdles, obviously, doing that. We are a publicly listed company, so we want to make sure we're doing everything correctly, and we are actively pursuing that and looking at that. I think you will see us offer that service into the U.S. But the point is, there's a lot more growth still to come because we have a very large untapped market that we think in the U.S. That is yet that we are to sell into, and so we think that's a real opportunity for the company as we move forward over the next few years. Again, this just highlights that mining framework agreement we have with Bitmain, 80,000 miners, and these are S21 Antminers. These are the latest series of ASIC mining rigs, very, very efficient rigs. And so what we're going to do is we'll be adding to our existing fleet, upgrading some of those fleets. We've been running S19 miners majority. We've now added S21s into the fleet. As we go out on our acquisition strategy and a vertical integration strategy to acquire more data centers, a lot of these data centers, if obviously they're going to be in operation, they may not have the latest miners. And so this gives us the opportunity to go in and upgrade those data centers as we acquire them as well. So it's a pretty good opportunity for us to do that. And again, the financing terms that we have on here, and we have disclosed this publicly, we have the opportunity to delay payment for up to 1 year for 20% of purchase price. So essentially an interest-free loan for a year. If we choose to, we could pay for some of those 20% of that miners in BitFuFu shares. I'm not sure we can do that, but we have that option. So it's very favorable terms with the largest manufacturer of mining rigs in the world. I get the question a lot: how does Bitcoin, how does cloud mining really benefit a user? Why wouldn't you just buy it off an exchange? And the shorter answer is we've looked at this over time, a number of different scenarios, and it really obviously varies over time of where we are in the cycle. But we found that a user cloud mining can wind up owning anywhere from 2 to 20% more Bitcoin by cloud mining than they could just buying straight off an exchange. And obviously that's it's a variable number of where we are in the cycle and difficulty rate and price of Bitcoin. But it really over time allows users to actually acquire more Bitcoin and acquire it very, very easily. It also allows, if you're a long-term investor, you believe the price of Bitcoin is going to be much higher, which of course we obviously do. From a retail strategy customer base, and we have a lot of customers that are dollar cost averaging down, right? So they're layering in the contracts, they're laddering it out, different durations of those contracts, and that allows them to mitigate a lot of the fluctuations you do see in the price of Bitcoin and capturing the upside of that as well. Self-mining, I won't spend much time on this. Really, it's pretty standard. We have ASIC miners in all these sites. We allocate a portion of that to self-mining. We're mining Bitcoin every day, and that's just for our own account. Our HODL strategy really has been to hold as much as possible, and we do sell a little bit to cover our hosting operating costs on a generally it's been a daily basis, but we do fluctuate that a little bit depending on where the price of Bitcoin is going, where we think it's going to go. But we essentially like to hodl as much Bitcoin as possible because we're pretty bullish on the long-term value of where Bitcoin is going to go. This is just the Aladdin system. This is what I mentioned earlier about our proprietary IP system. It does a number of things. It allows us to slide that hash rate between self and cloud mining. Within the cloud mining business, it allows us to take that hash rate and slice it up into chunks that customers want to buy, as small as 1 terahash. And it allows us to also monitor the entire fleet of mining rigs. Again, 5 continents, 30 data centers. We're monitoring this in real time and optimizing every one of those machines so that we're running the most efficiency that we possibly can. And this Aladdin system really allows us to do that. It is proprietary. It is IP protected. We do have a team that's dedicated to just doing this. It also provides security for the entire network and in the system. And so if we have a machine go down in real time, we know immediately exactly which mining rig it is that may have a problem, may have to go offline and have some maintenance to it. And so any kind of issue is being seen in real time, which I think is a little bit unique as well. And just so I'll run just quick. I won't go through all these numbers here, but this just gives, I think, a good flavor for kind of our 2024 results. Our Q1 results haven't come out yet. I think you'll probably see those come out shortly. But you see the growth and kind of the business, what we've done here on a mining capacity, where we were versus the end of last year. I think we've seen a significant amount of growth in the overall business. Obviously, that gets impacted by the halving that happened in April of last year, and which affected obviously all miners. But despite the halving, we continue to be profitable irregardless, and that's kind of the one takeaway message I think I would leave with folks is that BitFuFu, regardless of where we are in the cycle, Bitcoin is up, Bitcoin is down, the fluctuations, the company is profitable and has grown revenues and EBITDA across the board for the past 4 years, regardless of what the price of Bitcoin has done. Obviously, there's some volatility in between there, but on the whole, the company makes money year in and year out, regardless of the volatility of Bitcoin. And this is just our reconciliation of EBITDA. You can see in 2024, almost $118 million of EBITDA. That was up significantly from 2023 of it was 42 million or so there. So we think it's a pretty interesting story. It's a story a lot of people really aren't aware of, and we're just excited to get out there and talk to people and talk about it. So thanks very much for having us here.
Charlie, thank you again. And thank you to everybody watching. If you have any questions or would like to schedule a meeting with BitFuFu, please send me an email at weiss@lythampartners.com. If you'd like to learn about Lytham Partners, you can visit our website at lythampartners.com or follow us on LinkedIn to stay connected about future events. We hope you all enjoy the rest of the conference and have a great day.